Is the buy-to-let market broke? So I've currently got a purchase going through for my latest buy-to-let. However, I have hit a few hurdles on the way and something has happened that has never happened to me before. So stick around because I'm going to explain that and tell you all about it. Now, there's a lot of talk at the minute about buy-to-let not being viable, and it's totally understandable because, as we all know, interest rates are shooting up, inflation's up, the cost of living crisis, people are struggling to pay for things, they're struggling to survive, or at least they're struggling to keep up with the lifestyle that they previously had. So is the buy-to-let market really dead? Now, for me, no. I know a lot of people will disagree, and I know that a lot of people will give up. They will go around telling other people that buy-to-let's dead, property investing is no good. All of these things which you tend to get from people that are not involved in property, or they've dipped the toe in, maybe got burnt, and they're back out, and then they go and tell everybody that it's no good. Now, I can totally understand at the minute why landlords, why property investors are worried. So let me explain why. So the big problem we have at the minute is interest rates are going up. Mortgage lenders are pulling products, they're pulling the mortgages off the market. And when they put the mortgage products back on the market, we're going to find that the rates are a lot higher, which in turn means that the monthly payments will also be higher too. Now, of course, one of the solutions is to just simply increase your rent for your tenants. However, this will come with issues also because a lot of tenants are on what I call the borderline. So the reason that they are renting is because they don't have savings, they don't have surplus cash. So everything that they earn, the money that comes in, all goes out on their living expenses, mortgage, bills, etc, etc. Now, as we know, bills are going up, electric's going up, gas is going up, the cost of food is going up, and now mortgages are going up. So if we pass our cost on to our tenants, then a lot of tenants in this country are going to be in a situation where they simply cannot afford to continue living, or they simply can't afford to maintain all of the bills, all of their rental costs. There's going to be a very, very fine line where tenants simply refuse to pay their rent. Now, this is a big problem for landlords, it's a big problem for people like me. However, I do like to think that I've planned ahead for this. I do like to think that I've been cautious, so to speak. Now, I do know of property investors that have built massive portfolios by remortgaging the life out of every house that they own. Every time they get equity, they remortgage and pull money out and reinvest it. They go again. This is brilliant for increasing your portfolio, for building a property portfolio because you're recycling your funds. However, I found that people that have done this, when we reach a time like now where there's a potential for a property crash, where interest rates are going up, they find that they're then stuck in negative equity on a whole bunch of properties, and basically they're in the shit because the money they owe on them properties is more than what the equity they've got built up. So they tend to get themselves in a situation where they can't afford to keep up the payments. They have to sell off their properties. Some of them go bankrupt. I have seen it happen, and it's one of the things that I've always kept in my mind when you hear people talking about property. And they always tell you to, when your value of your property goes up, they tell you to remortgage, pull out the funds and use it to invest in another property. Now, this is great. However, as I've just said, what happens if the prices come down? What happens if you go into negative equity? Now, this is something I've tried to protect myself from. I do have a few properties where I did have the chance of remortgaging. I did have the chance of pulling money out to then invest in others, but I decided not to. I decided to keep my equity in the properties for times like this. Now, this does give me a little leeway because now I have more equity in the property. So this means that the mortgage payments are lower every month than they would be if I'd have taken out all the equity on the properties. So as a property investor, one of the best pieces of advice that I can give you is always plan ahead, always play cautiously. Don't just presume that interest rates are going to stay ridiculously low forever. Don't presume that house prices will always go up, because people that do that are the ones that tend to get burnt, that tend to be the ones that end up getting bankrupt or having to sell all the portfolio. Now, in terms of is buy-to-let broke, you can answer this both ways. You could say yes, it is broke because the interest rates have gone so high that the mortgage payments are higher, which doesn't give enough profit, so therefore it's not viable and it's simply not worth doing. And I totally understand, I totally accept people that say this. Don't get me wrong, I am a little worried myself. However, on the other hand, Buy-to-let is not dead as long as you do it correctly, as long as you get your numbers right, do your due diligence, and always approach this with an air of caution. Now, as I said at the start of the video, I've currently got a purchase going through. This is on my 7th buy-to-let. So my mortgage broker contacted me about 3 or 4 weeks ago and said they've applied for a mortgage with The Mortgage Works. This is a company, this is a lender that I've used a number of times before. I do have 3 or 4 mortgages with them already. Anyway, we submitted the application, and for the first time ever, they come back to me and they rejected the mortgage. I've noticed that recently mortgage lenders are becoming far more petty, is a word I could use, because the questions that they ask, they literally want you to jump through hoops. They ask you all sorts of ridiculous questions, what you wouldn't think were even related to the property. They want to know where the funds are from, obviously, but then you tell them where the funds have come from and they're still not happy. They want to see bank statements, even though they all add up, they're still not happy. Now with this purchase, I've got the deposit. I showed them the deposit. I showed them where the deposit comes from. In fact, in my business account, there was enough cash there to buy the property outright, and they still wouldn't give me the mortgage. I think they were just being awkward. I think they didn't really want to give anyone a mortgage at the time. Therefore, my mortgage broker has had to go and submit an application with a different lender. Now this is going through. It's all going through okay at the minute, so fingers crossed this should be done in the next couple of weeks. I've managed to secure a rate of 4.7%, I think. Now this is pretty good for a buy-to-let mortgage within a limited company, especially now. I presume that lenders have put them up to 6% plus. So hopefully this mortgage goes through and I can secure the deal. Now, another thing that I've noticed, I look at Rightmove every day. I'm always looking for properties. I'm always keeping on top of my area and what's going on. And in the last few weeks, I've noticed that properties are coming back on the market that were sold 2 months ago. Even properties that I've been to look at myself and people have put higher offers in and the offers have been accepted, they're now back on the market unsold. So it's clear that a lot of people are struggling, a lot of people are failing to get their mortgage applications through, or they're simply just pulling out because they're fearful of the market. And another thing that I've noticed is when you search Rightmove and you put in the date order and it says added today, added yesterday, I found that a lot of properties are now saying reduced today, reduced today, reduced today, which means the property market is stalling, sales are slowing down. Estate agents are having to put their properties on for lower to attract more attention, whereas a few months ago this was totally unheard of. Every property that went on the market had 20, 30 viewings or more and they sold no problem. We're getting to the point now where properties are sort of topping out and now estate agents are having to offer them at lower price to get rid of them. So does this mean we're in for a property crash? I'm not sure. There's still a lot of demand for property. However, property prices certainly aren't going to be going up anymore in the next 12 months, simply due to the interest rates. People can't afford as much as they could afford before. First time buyers struggling even more to get on the property market. Landlords are scared shitless, so they're selling up, and basically everybody within the sector is very fearful, including banks, including lenders. So adding all this up, there's no way that property prices can continue to increase in the foreseeable future. So as an investor myself, what will I be doing and what can I recommend that you do, whether you're a landlord, whether you're just starting out? As I said at the start, the big problem is at the minute, tenants, we rely on tenants to pay their rent so we can pay our mortgage and then we take the profit in between. And the big problem is a lot of tenants, as I said, they don't have that extra surplus cash to be able to take into account all of the rising costs, food, fuel, energy bills, rent. So there's going to come a point where they're absolutely maxed out. So for me personally, I've never increased the rent for my tenants over the years. However, I've come to a situation where I'm now being forced to increase the rent. One of my mortgages, I've got to remortgage because the 2-year term's coming up. So that mortgage is going from, I think, £185 up to around £260, something like that. Now I can't simply pass this on to my tenants because there's no way that they would be able to afford an £80 increase just like that. And I understand this. Therefore, what I'm doing at the minute is I'm increasing the rents for my tenants gradually. So, for example, in this situation, I've told my tenant that I'm going to have to increase the rent by £15 per month, even though the mortgage is going up by £80, £90 a month. Now, if I do this with each of my properties, it doesn't sound much, £15, but when you've got a number of properties, then you times this over 12 months, it does add up and it does make a big difference because my mortgage payments are going up. I'm not putting the rent up as much, so I'm losing out, they're losing out. Basically, it's going to be really, really tough times. I know we see people all the time banging on about when they're in the 70s, interest rates were 15%, we got through it, blah, blah, blah. However, what they're failing to understand is the ratio between earnings and house prices at the time was nowhere near what it is now. So if interest rates were to go up to 6 or 7% now, that would be the equivalent of 15, 16% back then. Now the next thing I want to discuss is, a lot of people have been saying recently that they're going to wait for a property crash, then there'll be loads of opportunities for them to jump in and get some really cheap property. Now this sounds all well and good, however the big problem with this is interest rates are going up, therefore the monthly payments are going up, so even if you're getting the property cheaper, you're not paying any less for it technically because you're paying more in interest. So yes, there may be deals about, it may be easier to buy a property because there's less competition. So unless you're a cash buyer, you're not going to really see a huge advantage. Now I can see it already. I can already see on Rightmove around my area that there are some good deals about, properties are dropping a bit, they're staying on the market longer, there will be room for negotiation. However, if I go to my mortgage broker now and say, I've just had an offer accepted on a property, can you get me a mortgage in my buy-to-let limited company? You'll probably say no, or you'll probably say yes, but the rate's gone ridiculous. So I might be paying the £300 per month where the rent's only going to be 500 or so. So it does make it really difficult. It has squeezed the profit out of doing buy-to-let. Now for me, of course, I'm going to continue. It just means I have to do my due diligence more. It just means I have to be more focused and lasered in on my numbers and make sure they are correct. Obviously, this is going to happen in time. If we look at the graphs, if we look at the charts on property prices, it's never a straight line. It's never continuous up. It's never continuous down. It's always up, down, up, down. So we are going to have times like this, which are inevitable, they're unavoidable. Now, if you're into buy-to-let, if you're thinking of investing in property, please leave your comments below, as it's always interesting to hear from other people and other people's opinions. If you have any questions, I'll do my best to answer them. If you enjoyed the quick video, please hit the thumbs up button, as it will really help a small channel like mine. And I'll catch you very soon with more property information, more updates on my portfolio, and also more updates on J9 Property.